So I think a majority of us can agree that Warren Buffett will go down as one of the greatest stock investors of all time. If you would have invested $1,000 into Berkshire Hathaway when Warren Buffett took it over, you would have roughly $21 million today. So let's take a look at Warren Buffett's 6 key principles to investing, and let's see if we can apply those to the cryptocurrency market. Tip number 1, cash is never a good investment.
This is something that goes with your philosophy today. Get out of cash and get into assets, because we don't know what's going to happen to the dollar.
Cash is always a bad investment. I mean, when people said cash is king a year ago, I mean, that's crazy. I mean, cash wasn't producing anything, and it was sure to go down in value over time. On the other hand, you always want to be sure you have enough. I mean, it's like oxygen. You want to be sure it's around, but you don't need to have excessive amounts of it around. And cash, anytime we have surplus cash around, I'm unhappy. I mean, I would much rather have good businesses than cash.
So that is where I think that holding stable coins in your portfolio is a smart investment. I think that you can generate passive income from it. And I think it's a great way to keep reserves on standby in case the market does tank down and that project that you're all about that you missed out on goes 90% off. You have the ability to ape into it. I also think that keeping Bitcoin in your portfolio is a very smart investment. So between Bitcoin and stable coins, I suggest that they make up roughly 30% of your portfolio. Tip number 2, invest in productive assets.
Third category of asset is something that you value based on it's what it will produce, what it will deliver. You buy a farm because you expect a certain amount of corn or soybeans or cotton or whatever it may be. You decide how much you pay based on how much you think the asset itself will deliver over time. And those are the assets that appeal to me and Charlie. Now,
so number 2 is a little tricky because every single crypto asset that you hold in your portfolio, for the most part, you can generate passive income by staking it in a decentralized protocol. For example, if I hold Shiba in my portfolio, I can come over and be a liquidity provider on Uniswap, and I can generate passive income by staking those assets on a decentralized exchange. Same thing with Bitcoin. But those are very high risk on assets because you're always going to be dependent on somebody else thinking that the value of that project is going to be worth more in the future. So they're willing to pay a premium now, hoping that it's going to go up in the future. I personally like big layer 1 projects because I see the utility in them. They are productive assets because people are going to want to leverage that technology to build and grow and scale their own personal ecosystem. So looking at new layer 1 projects like Cadena that I think have such massive upside potential because so many people are going to be building on that layer 1, that's the type of risk on asset that I want because I want to add that to my portfolio. I can then stake it. I can set up nodes. I can become a yield farmer. I can become a liquidity provider. I think having a big layer 1 project that's going to continue to scale and grow over time is a great asset to have in your portfolio. Tip number 3, stay in your circle of competence.
Defining your circle of competence is the most important aspect of investing. It's not how large your circle is. You don't have to be an expert on everything, but knowing where the perimeter of that circle of what you know and what you don't know is, and staying inside of it is all important.
This is key. Taking a look at a channel like Alex Becker, he's specifically specializing in gaming and metaverse. That's huge because that is his circle of competence. Mine personally is big layer 1 projects. I understand how layer 1 projects scale. I understand how these projects market. That is my circle of competence. And that's why you see things like Cadena and Flux make up a majority of my portfolio because those are the 2 assets that I actually understand the most. Those are the 2 assets that I believe in the most. And those are the 2 assets that I think are going to scale. Now, it doesn't mean that I'm going to be 100% right on that. That's just my circle of competence. Those are the projects that I understand. Tip number 4, do extensive research and evaluate the projects thoroughly before you make any investments.
How did it come to your attention? How do you find a stock like PetroChina?
I sit there in my office and I read an annual report, which fortunately was in English. And it described a very good company. Told about the oil reserves, told about the refining, told about the chemicals, everything else. And I sat there and read it, and I thought to myself, this company is worth about $100 billion. Now, I didn't look at the price first. I look at the business first and try and figure out what it's worth. Because if I look at the price first, I'll get influenced by that. So I look at the company first. I try to value it, and then I look at the price, and if the price is way less than what I've just valued it at, I'm going to buy it.
You guys have saw me interview almost every person on the Cadena team. I've interviewed every founder and creator of Flux. So when I find a project, I just don't watch somebody else's YouTube video on it before I invest in it. You guys have saw it with Cadena. I didn't buy Cadena the first time I put out a video on it. You guys watched it. I reached out to their team. I started interviewing members from their team. I started bringing on anybody I could from their team onto the show. And I did a lot of research. It took me 2 weeks before I bought one coin of Cadena Kadena. And now I think Kadena has more potential than any other crypto project ever has in the entire existence of cryptocurrency. That's how much I believe in Kadena. But it took me weeks and weeks and weeks of doing deep research before I started to add that to my portfolio. And that's going to lead us into tip number 5. Play big and don't waste opportunities.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come. You're not going to get 500 great opportunities. There's a temptation to dabble, particularly during bull markets. In stocks, it's so easy. It's easier now than ever because you can do it online. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one in the rest of your life, you would think a long time before every investment decision. And you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.
The first time I found Kadena, it was on its way up to like $2 or $2.25. And I said, hey, okay, based off of market structure, if this project comes down to $1.37 to $1.41, that's my key buy range. And after that interview with Stuart and really fully understanding and letting it all sink in exactly what Kadena was and how much potential it actually had, so I basically liquidated 25% of my portfolio on top of already putting in 10% of my portfolio. And then it wasn't more than a few weeks later that I hit a few moonshots and I ended up putting in another 30 grand into Kadena. So when I talk about going big, I went massively big on Kadena, and I still continue to buy Kadena to this day. Tip number 6, invest in yourself.
The best moat you can have is your own talent. You know, I mean, they can't take it away from you. Inflation can't take it from you. Right. Taxes can't take it from you. So I see these students and I tell them, you know, you're $1 million asset. I would pay you $100,000 the MBAs for 10% of the earnings for the rest of your life. So that makes you $1 million asset. Now, if you can do something to increase that value 50%, if you can learn to communicate better verbally or in written form, and you become 50% more, that's $500,000 just by improving yourself. I mean, nobody can take that away from you. And so I urge everybody, you know, I talk to them in high school about this and colleges, just develop the habits. You've got the brain power, you've got the energy, but develop the habits of success.
So tip number 6 is critically important, investing in yourself. You heard Warren Buffett say it. If you were $1 million asset and you could improve yourself by even 10%, whether that's getting better at speaking, getting better at teaching, getting better at whatever it may be, you are adding more value to yourself. Taking a look at somebody like myself, I started this YouTube channel. This YouTube channel is my business. This business generates revenue. If I take a week off from creating content and do nothing but study how the YouTube algorithm works, and then I'm able to generate more views or more passive income from my YouTube channel because I got better at editing, I got better at creating content, I got better at producing content, whatever the case may be. I invest my spare time into growing myself as a person, and hopefully if you do that right, it can compound. So my whole goal is to create a YouTube channel that you guys all want to come to hang out live so I can help educate you guys and help you guys become better crypto investors. So I feel like I enjoy giving back, and YouTube allows me to help give back to people. It allows me to help educate people, but at the same time, I'm also investing in myself and growing a business that's going to generate more and more and more and more passive income. And I'm going to take those investments and I'm going to invest them into the right crypto projects, I hope. And those projects should generate me more money. And then over time, I'm just leveraging and compounding what I'm already building on. But it all boils back down to investing in myself. I see opportunities. I try to take those opportunities. I try to help put the best coins on your guys' radar. And that's all I got. So drop some comments below. Let me know what you guys think, and I'll catch you guys in the next video. Peace.
Be calling, left on my blessings. I feel like I'm falling. The birdie is back. Tell me I'm garbage. I'm going through something. That's why I ain't calling.